While you were watching silver crash from $90 and questioning every decision you have ever made, somebody was buying. Not small, not cautious, massive strategic nation-state level accumulation. And the data trail they left behind tells a story that will either make you very wealthy or very angry depending on which side of this trade you're sitting on right now. Because what I found in the charts this week does not just suggest silver is going higher. It mathematically demands it. And by the time this video is over, you will understand exactly why $300 silver by summer is not a fantasy. It is a pattern that has played out twice before, and both times, the people who saw it coming changed their financial lives forever. Welcome to the hidden economy. If this kind of deep analysis is what you have been looking for, hit subscribe. I break down what mainstream financial media will not touch. And drop the word silver to the moon in the comments, so I know this community is paying attention. Let me start with something that has been bothering me for weeks. Silver broke above $50 for the first time in 50 years. Think about that. 50 years, half a century. From 1980 to 2025, silver was trapped in a range between $4 and $50. Every single time it approached 50, it got slammed back down. 1980, rejected. 2011, rejected. And for 50 years, the financial world accepted that as normal. But was it? That's the question nobody seems to be asking. Why was this monetary metal with exploding industrial and green energy demand stuck in a price box for 50 years while everything else went parabolic? The answer is manipulation. A system designed to suppress the price, to keep you from seeing silver's true value. But that system just broke. The breakout above $50 isn't just another price movement, it's a jailbreak. Now, let's look at the data, the stuff they don't want you to see. Take a look at this chart. This is the QOT report, the commitments of traders. It shows who is buying and who is selling in the futures market. For years, the story was the same. The big commercial banks, the so-called bullion banks, held massive short positions, betting against silver. Every time the price went up, they added more shorts and smashed it down. But look at what's happened in the last 6 months. Their short positions have been systematically reduced, week after week. They are quietly exiting their bets against silver. Why would they do that? Because they know what's coming. They know they can't control it anymore. The physical demand is simply overwhelming their paper games. And who is on the other side of this trade? Who is buying what they are selling? This is where it gets really interesting. It's not just small retail investors like you and me. The data points to massive coordinated buying from sovereign entities. We're talking about central banks and nation states that are diversifying away from the US dollar. They aren't buying paper silver ETFs. They are taking physical delivery. They are draining the COMEX and LBMA vaults at an unprecedented rate. Look at the registered silver inventory at the COMEX. It's at the lowest level in years. There's just not enough physical silver available to cover all the paper claims against it. This isn't speculation. This is a classic supply squeeze, but on a global scale. These nations are treating silver not as a commodity, but as a strategic monetary asset, just like gold. They see the writing on the wall for the current financial system and are preparing for what comes next. So we have the banks getting out of the way and nations accumulating physical metal. That's two massive pieces of the puzzle. But here's the third, the one that sets the timeline. The gold to silver ratio. This ratio simply tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, that ratio has been around 15 to 1. In recent decades, it has been massively inflated, sometimes reaching over 100 to 1. This was part of the price suppression scheme. But whenever a major monetary shift is about to happen, this ratio corrects violently. Right now, it's sitting around 80 to 1. But twice before, when silver went on a historic run, this ratio collapsed. In 1980, it plunged. In 2011, it plunged again. Each time, the collapse of this ratio preceded a parabolic move in the price of silver. We are seeing the beginning of that collapse right now. As gold makes new all-time highs, silver has lagged behind. This is the classic pattern. Gold moves first, confirms the new bull market, and then silver plays catch-up with explosive force. If gold stays at its current level of around $3,000 and the ratio returns to its historical mean of even 20 to 1, that puts silver at $150. But that's a conservative estimate. What if gold continues its run to $4,000 or $5,000, as many analysts are predicting? And what if the ratio overshoots, as it often does in a panic, and drops to 10 to 1? You are looking at silver prices that seem unimaginable right now. Do the math yourself. $5,000 gold with a 15 to 1 ratio is over $330 silver. This isn't a guess. It's an outcome dictated by historical precedent and market mechanics. The breakout above the 50-year, $50 ceiling is the starting gun. The bank's retreat from their short positions is clearing the runway. And the national level buying is the fuel for the rocket. When you put all three of these factors together, you don't get a gentle rise in price. You get a vertical, face-ripping rally that leaves most people behind. It happens fast. In 2011, silver went from $30 to nearly $50 in a matter of weeks. This time, the setup is even more explosive. The debt levels are higher, the geopolitical instability is worse, and the de-dollarization trend is accelerating. All of these are rocket fuel for precious metals. So what does this mean for you? It means the window of opportunity is closing. The chance to buy silver at these artificially low prices is a gift that won't last. Every day you wait, you risk paying a much higher price, or worse, not being able to find any physical silver to buy at all. We are approaching the point where the paper price decouples from the physical price. The price you see on your screen won't be the price you can actually buy it for, if you can even get it. This is the moment where fortunes are made. The people who understood the setup in 1980 and 2011 didn't have to worry about their retirement. They created generational wealth. We are standing at the precipice of the third and likely largest silver run in modern history. The data is clear, the pattern is undeniable. The question is, will you be on the right side of it? Don't just take my word for it. Do your own research. Look at the charts I've shown you. Look at the inventory levels. Look at the gold to silver ratio. The evidence is overwhelming. Mainstream media will keep you distracted with other stories until it's too late. They will call you crazy right up until the moment silver hits $100, then $200, then $300. By then, the big money will have already been made. This is your chance to get in before the herd. For your entire life, you've been told a story. It's a simple story, one that's easy to believe. It goes like this. Silver is just a $50 metal. That's what they told you. That's what they told your parents. It's what every analyst on television has repeated year after year like a broken record. But while you were listening to that story, something else was happening. Something nobody wanted to talk about. During those same 50 years, gold didn't stay trapped. Gold blew past its 1980 high. It blew past its 2011 high. Gold just kept making new highs, decade after decade. And it wasn't just gold. Look at copper. For decades, copper bounced around in a range between 50 cents and $1.50. Then, in 2006, it broke out and shot up to $4.50. Lead did the exact same thing in 2007. Do you see the pattern here? Every single commodity that was compressed in a long-term range eventually broke through and repriced dramatically higher. Every single one, except for silver. For 50 long years, silver was the only major commodity held down, artificially suppressed below its historical range. Do you understand what that means? It means the incredible pressure that has been building up inside this market for 5 decades is now finally being released. And when 50 years of suppressed energy finally breaks free, it doesn't move by 10%. It moves by hundreds of percent. That's not just my opinion. That is what the chart is screaming right now. This isn't just about a metal. It's about a coiled spring wound tighter and tighter for half a century. And now that spring is uncoiling. The laws of physics, both in the natural world and in financial markets, dictate that this release of energy will be powerful, explosive, and life-changing for those who understand what's happening. This isn't a story about slow, steady gains. This is a story about a market on the verge of a seismic shift. Let me show you something that completely changed my entire framework on this trade, something that made me question everything I thought I knew. I went back and I studied every major silver surge in modern history. I'm talking about the big ones, the moves that legends are made of. And I found a pattern so consistent, so undeniable, that it made me put down my coffee and just stare at the screen in disbelief. Let's go back to 1979, 1980. Silver went from roughly $12 to $50. It quadrupled. And guess how long that took? It happened in just 5 months. Not 5 years, 5 months. Now let's jump forward to 2010, 2011. A similar story. Silver went from about $18 to nearly $50. It more than doubled. And how long did that take? 7 months? Do you see it? Both of these historic surges happened within a couple of quarters. 5 months, 7 months. The explosive move, the part where the real life-altering money is made, happens fast. It doesn't drag on for years. It unfolds over a matter of months. And here's the crucial part, the detail that most people miss. Both times, there was a sharp, brutal correction right in the middle of the surge. A jiggle, a scary, gut-wrenching pullback that shook out everyone who wasn't paying attention to the pattern. It's the kind of move that makes everyone say, "It's over. Silver is done. I should have sold." But both times, that pullback was the absolute last opportunity to get positioned before the final, breathtaking acceleration. It was a test of conviction, a test to see who really understood the underlying pattern versus who was just along for the ride. Now, look at what just happened. This is where it gets really interesting. Silver started accelerating in November 2025. That was month 1. December was month 2. By the end of January, silver had surged spectacularly, blowing past $90. And then what happened? The crash. A brutal, fast collapse over a day and a half that took silver back down and made every single holder sick to their stomach. Sound familiar? It should, because this is the exact same pattern playing out again. Month 1, month 2, then a sharp correction designed to shake out the weak hands. The market is running the same playbook, and if this pattern holds, which it has twice before with remarkable precision, it means the real move hasn't even started yet. The majority of the gain, the part where silver goes from here to $300 or even beyond, is set to happen in months 3 through 6. That puts us squarely in the early summer of 2026. We are on the precipice of the most explosive part of the entire move. But here is where it gets truly insane. This is the part that separates this move from anything that has ever come before it. Think about this. In 1980, silver quadrupled, but it did so inside a $50 ceiling. The old range was between $4 and $50, and the surge, as powerful as it was, stayed within that established range. In 2011, it was the same story. Silver more than doubled, but once again, it slammed into that $50 wall and couldn't break through. Both of those surges were incredibly powerful, but they were confined. They were trapped within the old reality, the old pricing paradigm. This time is different. This time, silver has already broken through the 50-year ceiling. The lid is off. The old reality is gone. We are in uncharted territory. We are not just repeating history, we are witnessing an evolution. For the first time in modern history, silver is trading freely, unconstrained by the psychological and technical barriers that have held it down for generations. So, what does this mean? It means the potential upside is not limited by a $50 ceiling. It's not limited by anything we've seen before. When a market breaks a 50-year pattern of suppression, the subsequent repricing isn't a gentle adjustment. It's a violent revaluation. The energy being released is not just from the last few years, it's the pent-up frustration of 5 decades. We are not just looking at a rally, we are looking at a repricing event of historic proportions. The pattern is clear. The historical precedent is undeniable. The 50-year ceiling has been shattered. The question you have to ask yourself is not if this is happening, but whether you have the conviction to see it through. The market has given us the roadmap. It has shown us the playbook. The next few months could redefine not just the price of silver, but the financial futures of those who are paying attention. The biggest move is still ahead. For half a century, a $50 cap held silver down. It was a ceiling made of steel, but it just shattered. And even after that brutal crash we just saw, silver did not fall back below 50. It held strong, right above that old range. Do you understand what this means? The floor of this new reality is the ceiling of the old one. Silver is not going back to the old world. It's building a launch pad on top of it, getting ready for what comes next. Imagine a massive dam. For 50 long years, water has been building up behind that concrete wall. The pressure has been increasing every year, every single decade. Every attempt to breach the wall was pushed back, but the water never went away. It just kept building and building. And now, for the first time in 50 years, that wall is cracked. And let me tell you, the water isn't going to politely trickle through. It's going to blast through with 50 years of accumulated force behind it. That's exactly what's happening to silver right now. The dam is cracked, and nobody can put it back together again. Now, I want to talk about something crucial that most silver analysts are getting completely wrong, and it is costing their audience a fortune. So please, stay with me here, because this is incredibly important. After the big crash, I saw dozens of prominent voices in the precious metals space proudly announce that they had sold their entire silver position at $90. They pointed to their RSI charts, their momentum oscillators, their overbought indicators, and they confidently said silver was overextended and due for a correction. And technically, they were right. A correction did come, but here's the massive problem with their thinking. They're using old tools to measure a brand new reality. It's like using a room temperature thermometer to measure the inside of a volcano. The instrument simply wasn't built for this kind of environment. Seeing an RSI hit 80 on a monthly chart used to mean overbought. Yes, it used to, back in the old range when silver was trapped between $4 and $50. In that context, those readings made perfect sense, but we are not in that range anymore. The annual momentum charts I've pulled show that silver has already blown past the momentum levels that marked the 2011 high and even the 2020 surge high. The old ceiling on momentum has been broken, just like the old ceiling on price. This means anyone using old, outdated, overbought metrics to time their exit is going to miss the largest move of their lifetime. And here's the really cruel part. Once they sell, the psychological barrier to getting back in at a higher price is enormous. Most of them never will. They'll just watch from the sidelines as silver does exactly what copper did after its own multi-decade breakout. They will be right about a short-term correction, but catastrophically wrong about the long-term trend. I believe there are 3 types of people watching this video right now. The first type sold their silver during the crash and is secretly hoping I'm wrong so they can feel smart about their decision. The second type held on through all the pain and is looking for confirmation that they aren't crazy for believing. And the third type has been watching from the sidelines, waiting for the perfect entry point, and is now realizing that the perfect entry might have already passed them by. Whichever one of those you are, I have to be blunt. The data does not care about your feelings. It only cares about the pattern. And the pattern says we are in month 2 of a 5 to 7 month surge that, historically, has produced triple-digit percentage gains. Now, let me show you something that nobody else is talking about, something that paints an even clearer picture of what's to come for silver. Thanks for sticking with me. Let's dive into the charts. All right, let me give you the number that made me sit back and take a very deep breath. Gold made its cycle low back in 2015 at roughly $1,050 per ounce. Now, here's the thing. In previous bull markets, gold has made an 8-fold move from its cycle low to its peak. The 1980 peak, that was an 8-fold move from its base. The 2011 peak, also an 8-fold move from its base. So let's do the math. An 8-fold move from $1,050 puts gold at $8,400. And get this, JP Morgan, one of the largest and most influential banks on the planet, just published a target of $8,500 for gold. It's basically the same number. When a powerhouse like JP Morgan is publishing the same target that a historical pattern produces independently, that is not a coincidence. That is confirmation. It's a huge signal that something significant is brewing. So what does this all mean for silver? Well, if gold goes to $8,500 and the gold to silver ratio reverts even halfway toward its historical average, silver at $300 isn't an aggressive forecast. It's the mathematical midpoint. It's what you would expect. And if we see a full normalization of that ratio, silver at $500 becomes the upper range of what that could look like. Think about that for a second. Now, remember, based on the precedents we saw in 1979 and 2010, the truly explosive part of this move happens fast. It happens within 5 to 7 months of the initial breakout. We are in month 2 right now. The clock is ticking. This isn't a slow burn. It's a potential rocket launch. But I need to be honest with you about the risks. I'm not here to sell you a dream or paint a fantasy picture. I'm here to show you the data and what it suggests, good and bad. Silver is volatile. It can be a wild ride. The crash from its previous highs proved that. If you're using leverage, you can get wiped out on a pullback, even if the long-term direction is still pointing straight up. It's a double-edged sword. And let's talk about mining stocks. Even during a roaring bull market, they can drop 50% in a correction. Timing the market is brutally difficult, and let's be real, nobody gets it perfect. It's easy to get shaken out right before the big move. There are also scenarios where this entire pattern breaks down. If governments suddenly and aggressively raise interest rates, if we get hit with a major deflationary shock, or if China reverses its export controls on key materials, the whole thesis weakens. Now, based on the current data, I don't think any of those scenarios are likely, but they are possible. It's crucial to acknowledge them. This is not financial advice. I want to be crystal clear on that. This is pattern recognition applied to publicly available data. What you choose to do with this information is entirely your decision. But here's what I keep coming back to. Let me paint you a picture of what the next few weeks might look like if the pattern holds true to form. February is what I'm calling the stabilization month. It's the arm wrestling match between the bulls and the bears. Silver bounces, it pulls back, it bounces again. It can feel frustrating. It might feel like absolutely nothing is happening. But underneath the surface, the structure is rebuilding. The foundation is being reset for the next leg up. The 3-month moving average is holding, which is a key technical support level. Short-term buy signals are starting to trigger. If silver reclaims the upper $80 range this week or next, the bears are in serious, serious trouble. That would be a major sign of strength. By March, if the pattern holds, we should see silver challenge its recent highs again. And that is when the game completely changes. Because the second time silver approaches a high after shaking out all the weak hands, there's no overhead resistance left. Think about it. Everyone who was going to sell has already sold on the way up and during the pullback. The only people left are the buyers, the believers. And that is when the acceleration kicks in, March through June. That is the window. That's the period where, historically, the most dramatic price moves have occurred. It's when patience pays off and the market can go parabolic. So keep a close eye on these next few weeks. The stabilization in February could be the calm before the storm. The real action might be, let's talk about a pattern, a rhythm in the market that most people miss. We're going to look at the history of silver, not just the random ups and downs, but the moments that defined generations of wealth. Think back to 1979. It quadruples. A breakout, a new surge of energy, and silver multiplies its value by 2.5 times. These weren't just blips on a chart. They were seismic shifts. And each time, they began from a very specific launch pad. Now look at where we are today. This isn't just another repeat. It's an amplification. The starting point for this current move isn't $12 or $18 like in the past. We are launching from the highest base silver has ever established in its entire history. We've broken through a 50-year ceiling, a psychological barrier that held the price down for half a century. And we're not just hovering, we are building a foundation above it. This is completely new territory. Every single major economic indicator is flashing green for silver. From inflation fears and currency devaluation to industrial demand, from the green energy and tech sectors, the fundamentals are all aligned. But there's something else, something the mainstream news won't tell you. Look at the physical market. They're telling us the real on-the-ground price is already much, much higher than the number you see on your screen. The paper market is lagging behind reality, and that gap can't last forever. Imagine this for a second. It's 5 years from now. You're looking back at today, at this exact moment in time. You'll remember the recent volatility. You'll remember the sharp pullback from $90, the fear, the doubt. You'll remember that sick feeling in your stomach as you watch the price drop. You'll remember the headlines on every financial news channel. Experts confidently declaring that silver's run was over, that it was a failed trade, that it was finished. And in that future moment, you're going to remember one of two things. You'll either remember it as the time you gave in to the panic, listened to the noise, and sold your position, locking in a loss or missing out on what came next. Or you will remember it as the moment you tuned out the hysteria, the moment you looked past the headlines and focused on the raw data. You saw the historical pattern, you understood the significance of breaking the 50-year range, and you made a decision based on logic, not fear. A decision that could very well change the course of your financial future. Let's put this into perspective. For 5 decades, the prevailing wisdom was that it could never sustainably break and hold above $50. It was a ceiling made of steel. And then, it didn't just break it, it shattered it. The explosion of energy was immense, and look what happened since. Even after one of the sharpest, most brutal corrections we've seen in years, where is silver? It's still trading above that old, supposedly unbreakable ceiling. This is the most crucial point to understand. The floor of our new reality is the ceiling of the old one. This isn't just a temporary spike, it's a fundamental repricing. The entire playing field has been elevated. We are in a new paradigm for silver, and the rules have changed. The 50-year consolidation is over. The breakout has been confirmed. And we are now in the early stages of price discovery in a world that has never seen silver this strong, this fundamentally supported, and this ready to run. The previous patterns suggest what's possible. The question is, will you see it for what it is? Thank you for watching.